Good afternoon, everyone, and welcome to Stock Market Today. Ali Corman, Ed Carson here with a look at the action in today's session. We're going to, of course, take a look at the major indexes and the technical action you need to be aware of on that front. And then underneath the surface, Ed, got a couple of setups to take a look at, and then one software stock that's not looking so great anymore right now.
Yeah, CrowdStrike continues to weaken, but as you were mentioning, Copart and Idexx Labs, both long-term leaders, are both trying to find key support.
Okay, we'll check in on those first. A look at the major indexes. Here is the NASDAQ Composite on MarketSmith, finishing the day with a loss of less than 1%. We had the S&P 500 down 0.7%, the Dow down 0.8%, and small caps continuing to struggle here. The hardest hit for today, down about 1.4%, Ed. So are we finally getting a little bit more of a shakeout, do you think?
It certainly feels like it. And, there'd be great if we could actually go downtrend a little bit and go sideways. You'd actually form bases as opposed to this choppy action we've seen. We've had a lot of head fakes. Oh, this is moving out. And then it's like then the market goes up and down, and it's just been tricky to make new buys. So it'd be great if we could just be a little bit more steady here, but we don't know. Meanwhile, the Dow and S&P are essentially at highs.
Right.
I mean, it's like one down day, but you wouldn't even, it's like it's hard to take that too seriously. It's nice that they all formed and they bounced off their 21-day lines for the Dow and S&P. The NASDAQ had its 50-day line, which still isn't far away. The Russell is a little bit more troubling. I mean, I think that in many ways, again, it came off lows, but it keeps on sinking. It's nowhere near the 50-day line once again. It's testing its 200-day line. It's basically right at the 40-week line. Just not a good action. It's a nice proxy for market breadth, but if you called up GMIAB, which is our advanced decline line, this does not include today, but today isn't good. Let me assure you, it wasn't good, and you can see we already undercut, and so that's the lowest level since right at the beginning of the year, like right in early January. So that's just a sign of the market breadth is very narrow. So that's just a worrisome sign beneath the, in the market.
And meanwhile, if we looked at the NASDAQ and then to contrast that with QQQ, we're still seeing support right around the 21-day line for QQQ. So not much of a dent in that performance.
Yeah, that looks a lot like the S&P and the Dow. I mean, Apple and Microsoft, they were down today, but it's like, they're just down a little bit off record highs. So yeah, that's looking fine. It's those growth names that are really struggling, but it's a lot of other things. It wasn't just growth names. I mean, steel was hit hard, home builders were hit hard. Financials, they weren't great, they weren't terrible. Industrials gave up gains. So it's just like it goes on and on. There weren't a whole lot of places high. There was one sector, and we'll get to that, but for the most part, it was a lot of red today.
Including from CrowdStrike, CRWD, one of the software leaders that we had been focusing on in June with its run up, but giving back a lot of its gains last week and this week as well. It was able to close off of its lows for the day, down about 0.8%. Intraday, though, undercutting yesterday's low, and it's really given back a lot of its gains from this early entry, all of its gains, really.
Yeah, intraday it did. I mean, whether you use the handle or you use the 227 spot, either way, it got there. I think it got to 227.25. So whatever buy point you were using, it undercut all of that. That was a 20% gain. That was a big gain. This was one of the real leaders that looked really strong. And this is one of the issues. It's like, oh, okay, sometimes you say, well, I don't want to sell. And that can be strong, but then it keeps on falling and falling. And now a 20% gain is gone. Obviously, if you bought it near the official buy point, you're down 8, 10, maybe 12%. So you want to be getting out, and you're well below the 50-day and 10-week lines, all reasons to be getting out. But even from the early entry, that's just not positive action at all.
So down about 4.5% so far for this week. But you mentioned the sell signal that was triggered last week. So a couple of things here. We like using those early entries, but also it's a good idea to take some profits into strength and not just wait for more defensive sell signals, because giving back a 20% gain really hurts.
Yeah. And it's hard when it's like we talk about it, like, and Scott St. Clair talks about when the ducks are quacking, you should sell. Like, you could argue that you could have sold as they got to new highs where other places. But certainly as it got through the 10-week line, either there or even just when it hit a new high, you could have done it. And, ultimately you probably would have sold, you wouldn't have sold any earlier. But definitely when it came through the 10-week line, 50-day line like that, you wanted to take at least partial profit. So this doesn't happen. So you don't see a strong gain. You don't want to make a really good buying decision turn into a nothing or a loss.
Yeah. So what do you think that this says about the software sector strength that we had seen? Is this a signal of what's to come for other names in the group?
I mean, this might just be the laggard. Maybe if the market stabilizes, then everything starts to move up, and some other stocks that are sort of hanging around there, DocuSign, Shopify, or just other names, that they'll rebound from here. And people will look back and say, this was the moment. This was the moment to buy if you were smart. But you don't know, because you could have argued when CrowdStrike was testing that 50-day line, oh, this is when you should really buy. And then it didn't, it wasn't.
Yeah, well, let's now turn our attention to CPRT Copart and its pullback to the 50-day line, down about 1.3% for the day. But overall, I guess if you compare the downside volume to the recent upside volume on the move up, even though we've had a couple of days of above average downside volume, it's still less than what we saw when the stock was moving higher.
No, that's right. And it's had a nice move on the way up, and it's come back down, sort of the first test of that 10-week line since that breakout. So this is sort of a buying opportunity if it rebounds further. Some people buy on the way down, but we generally argue on the way up. So when it shows some strength, but that would be a buying opportunity, especially because this is a long-term leader. And we often talk about buying off of pullbacks because they have this great performance over time, but sometimes, they might undercut or other issues. So you may want to just buy it at the pullback. There's a lot of good things. With the auto pricing, even though maybe people are balking at $40,000 new cars, salvage cars would seem still like an attractive situation. The pricing probably wouldn't be too extreme. I don't know, but so this would still seem to be a strong area. But we know the auto sector had a really tough day today because people, consumers might just be saying, I can't pay that, or I won't pay that. It's just been going up too much.
Yeah, so regarding its long-term leadership qualities, we have this multi-year EPS growth rate here of 27%, quite solid, and very stable earnings. So our earnings stability number, the lower, the better. So a low single digit here. That is a very good sign. And in terms of buying these on pullbacks, because the strategy here for long-term leaders is you're trying to hold it for a bigger move, you may be experiencing some drawdown. So if you can get in there on a pullback when it's close to the 50-day line versus a breakout, that'll hopefully get you in at an optimal time to be able to withstand some of these slower movers, perhaps, that over the long term, hence the name, to outperform.
That's exactly right. Yeah.
Okay, and well, let's take a look at another long-term leader, and that is Idexx Laboratories, IDXX. Also, forgot to mention that Copart was our stock of the day today. And tell me, Ed, what you're seeing in the chart of IDXX here.
Well, it's finding support at the 10-week line the past couple of weeks. That's after a nice run. I'll be honest, I think that breakout sort of, a lot of people pass it by because there wasn't a lot of volume at various times. There wasn't a lot of volume, coming in out of there. So, but it kept running. That happens. So it worked. That's the fact. And it really steady winner. This was a great breakout, really, in that sense. So it's pausing here, 10-week line. It's finding support at the 21-day line. Maybe this turns into a flat base, but if it has a nice bounce here, it would be actionable as a bullish rebound from the 10-week line. So it's just, this is like one of the only sectors that's doing well right now.
Yes, and we will take a look at XLV here in a moment, but one potential strategy that you could use for a long-term leader like IDXX is instead of maybe waiting for this first pullback, like you said, Ed, the low volume, maybe it wasn't on your radar, but you can also try drawing some sort of, it's not the cleanest trend line, but within the base here. And when it breaks that trend line, it's still close to the 50-day line there. That also a time that you could have gotten into this stock. But as you mentioned, XLV, medical sector or healthcare looking mighty strong.
Yeah, it's been really looking good. And Again, sometimes a lot of them are sneaky. They got this, but Idexx Labs, there's Zoetis, there's Intuitive Surgical, there's United Health, there's HCA Healthcare. So there's a lot of different sectors. I mean, in a way, this thing, if healthcare spending tends to increase. There's because of insurance, there's government money. Even if consumers don't have money, somebody else will spend it for you to a certain extent on healthcare. And so that often is a growth area in choppy markets. But this has definitely been working very well, and should definitely be considering medical stocks for your portfolio.
Such a good point. And those medical industry groups have been bubbling up in our weekly industry group analysis that we do every Monday on IBD Live. So another great visual representation of the strength that we're seeing there. And while we do use ETFs as a way to see how groups are performing, you don't want to just buy, and if you want to get exposure to a group, you can't just buy an ETF anywhere.
Yeah,
you want to be selective too about where you get in.
This does look somewhat extended. I mean, I'll be honest, it does, and that's an issue. It hasn't, there's probably times off the 50-day line, but not really great basis since back in March or April. That's one of the funny things. It started breaking out when everything became woe is me. Oh, everything's terrible. Tech is terrible. But the medicals have been great for several months now. And that's been the time to do it. But there are stocks that are sort of setting up in the medical field. But yeah, you don't want to just buy, anywhere in this kind of environment. A few bases, a few 10-week lines, but not right now. You're making a good point.
Mm-hmm. Well, we all tend to make those points on IBD Live. How many times we get asked about stocks that they're unfortunately extended? You never know. It could still go up from that point in time where it's extended, but then your risk reward ratio is thrown up. And something that we talked about today on IEBD Live with David Ryan was how if you're really laser focused and pinpointing the right time to buy, that can help you set your stops on the way down. And you don't have to wait for the 7 to 8% loss rule to trigger if there's a logical area of support that can get you out even sooner.
Yeah, buying right definitely helps, but then you have to follow through and sell when it does hit those levels. That's the biggest thing ultimately.
Yes, it takes both of those elements, and we're there to handhold you every step of the way and handhold each other, and be that support group that we all need to hold each other accountable to follow the rules every morning on IBD Live. So we hope you join us, investors.com/IBD Live. Thank you, Ed, for your analysis, and for everyone for tuning in. We'll see you back here tomorrow.